Backles from JB Commercial Finance here. Last week we had the first base rate rise in this country since March 2009. Wow, 8.5 years ago base rate dropped to 0.5%. It dropped again last year to 0.25%, and now we're back up to the level we were at then. I want to have a very brief conversation about the impact this is likely to have on you, myself and the wider economy. Now, on the face of it, there's not a major problem here. Base is still at an astonishingly low historic level of 0.5%, where 10 years ago we were hovering 4.5%, 5%, etc. So back to 0.5%, not a major problem. The issue is, this is the first rise for all those years. The market has been waiting for this rise for a number of years as well, and anticipating it. And we know that the Governor of the Bank of England, Matt Carney, has been very, very keen to do this to curb inflation, which is traditional Bank of England policy to reduce inflation, which is its primary objective. So, the fact that it's gone back to 0.5% is neither here nor there really in the great scheme of things. The fact though that they've broken the seal and allowed the first rise to happen since the economic crash back in 2007, 2008, 2009 may be an indication that we can expect another base rate increase relatively quickly. Now this could have an impact. If base rate goes up again to 0.75 to 1% in the next few months, then lenders will all of a sudden get very, very cautious about their fixed rates. And the current rates now you're offered on residential mortgages, which are hovering in the low 2s for very, very good customers, and on commercial loans, which are hovering in the 4s, could quite easily go up to 5-6% very, very quickly. This is because if you're a lender and you're factoring in a fixed rate term of 2, 5, even 10 years, you are going to anticipate base going up quite a considerable amount in that time. Well, over the last 10 years, we've had very, very little increase, certainly since March 2009, when base first fell to 0.5%. What this is going to mean for you as a borrowing customer, it means that you're going to have less money in your pocket because your mortgage repayments are going to cost more if you're on a variable rate mortgage. And if you're on a fixed rate, a historic fixed rate, chances are when you come off it, if you go onto a standard variable rate or a base rate linked loan or try and get a new fixed rate, it's going to cost you more than it did when you fixed it over the last few years, which again is going to mean less money in your pocket. Now, the wider impact of that on the economy means that there's going to be less money swilling about to spend on consumables. So businesses are going to have less money to be able to spend on expansion, on marketing, on staff, on growth, and individuals are going to have less money to spend on the nice things in life we like. They're going to have more money tied up in their debt servicing. Now, it also could have a very positive impact on those on the more cautious end of the marketplace, as they'll be earning more money on savings. But this money is traditionally kept in savings accounts, not used to be put back into the economy for the greater growth. So this is likely to be the start of a little bit of a slowdown, which combined with the uncertainty over Brexit and the current government's weak position, really could have some impact over the next 2-3 years. But, as everything in life, opportunities are what you make of them. In my current marketplace, as soon as the announcement of the base rate increase came out, I had a barrage of lenders come to me saying that they're going to keep their rates the same, they're not going to alter anything, they're going to continue to support the clients, support guys like me, which is fantastic news. So the early indications are that it's not going to have a major impact, but it's very, very important to be mindful of the potential impact down the line of continuing base rate increases. That's all for now. Thank you very much for your time. I'm James Backles, JB Commercial Finance. I hope you found that relatively interesting.